The Central Economic Work Conference has assessed this year's achievements and set the tone for economic development for next year. Which statements from the conference may have a big impact on growth in 2024?
The statement from the conference about using progress to promote stability, we think implies that some of these efforts that the government has made so far this year will be stepped up into next year. So on the monetary policy side, we think that this kind of signals that there will be a bit more in the way of modest monetary policy easing. But I think the more interesting takeaway is on the fiscal side, where the discussion of proactive fiscal policy being intensified. But I think, in terms of the overall message, it's still not one of a large degree of stimulus. It's more about keeping growth stable and by, sort of managing some of the downside risks in the economy rather than giving a major boost to the growth outlook.
So, what's your take on the economic situation this year in China?
In terms of our outlook for this year, we actually just revised up on Friday our growth forecast for 2023 from 4.8% to 5.3%. So I think, what is influencing this upward revision in growth is that the third quarter came out a bit more stable and a bit stronger than what we had anticipated. In comparison, though, China's economy is still growing at a relatively strong pace compared to the rest of the world. Emerging markets this year have come under a bit of pressure as well. And advanced economies have also seen quite a lot of economic challenges given higher and rising interest rates. It's very clear that the government wants to move the driver of growth away from the property sector to what it views as a more sustainable model relying on new manufacturing sectors such as electric vehicles, batteries, renewable energy, as well as more reliance on consumption growth rather than investment.
You mentioned that the country is now shifting its driving force for economic growth from property sector while also battling other headwinds. Do you think now is the right time to make the transition, and what happens if we don't do it?
This is certainly a policy priority, and we did see quite a lot of imbalances built up in the property sector. There were questions about how sort of sustainable and desirable such credit-driven growth were for the Chinese economy. So certainly reducing the risk coming from property itself it does help to promote stability. But the question is managing this transition between the property sector driven growth and this new growth model. How does the government sort of manage that? And I think that's the challenge that we're facing, that China's facing right now. We do think that a lot of the trends that we saw in 2023 will continue. So we see a bit more downside in the property sector, especially in the first half of the year. On the external demand front, we do see a bit of recovery in exports for next year, although we think it will be only a very gradual recovery because growth in advanced economies and the global growth just is a bit weaker in our forecast going into 2024. And this is where the degree of policy support will come into play. We do think, and underlying our forecasts is an assumption that the government will utilize, again, monetary policy and more significantly, fiscal policy to help support more stable growth next year.